And good morning. Greetings to you, lovers and haters, but more importantly, the lovers. Smash the like button. Let's go. So I left my iPad at my new house. I have no idea how many people are watching the show. It could be 4. It could be a lot more than that. So I'm just going to roll with it. So I look at it and I say we have 29 likes now. I assume that's bad, but I could be wrong. Maybe we only have 29 people watching and 4 haters, of course. But they just pop in, dislike, they gone. All right, so let's see what we got going on today. It's funny, I looked at the futures down last night. I looked at the futures last night. And the Dow was up 400 points, and I sent it to the Bid and Ask Nation. I just said this never stops. Next thing you know, you wake up this morning, and here we is, with numbers that are, they say inflation outweighs the earnings. Okay, I'm sure that'll last. All right, let's see what we got today. Not much news out there, to be honest with you. Where do I want to start? I'll start here because I want to build up before we start talking about this China stuff. Stock market news live update. Stock market futures drop as inflation concerns outweigh earnings optimism. I'm telling you guys, earnings is not as good as earnings numbers are. They're doing whatever they can to make them a little bit better, I think. Just my opinion. I don't know. I could be wrong. But that's why we like cash flow instead of looking at the price of earnings per share. The move, so market was up last night. Futures were up last night. Market's down this morning. The moves track drop overseas as equities reported that China has slowed GDP growth at the slowest rate since last year. And now we're comparing it to last year. I mean, if it's slower than last year, there's a comparison. I don't know if it's in this story, but there's another story, and it was talking about how it's comparing it to last September, and it's slower than last September. I think that has to do with Chinese property values or something to that effect. I'll get to it in a second, but that is bad because we remember September last year was very slow. So if we're slower than that, yikes. Their slowing has for the third quarter as energy shortages and property sector turmoil drag down economic activity in the world's second largest economy. Let's see where we go here. Really strong. Talking about banks going forward, I think it's going to be key for the market going forward. If the consumer is there and they're willing to spend, it all comes down to consumer spending, which we've seen in the month of September when retail sales started to come back a little bit. Then I think that gives a little more optimism to the market that as we continue to reopen, the earnings are strong, consumers will be there, equity markets will continue to trend higher. Of course, that begs us to look at the case of supply shortages. So if there's nothing to buy, there's nothing to spend. Let's see what you guys are saying. Anything interesting to me so far? I'm sure you are saying interesting things, but I'm only one man. I can only multitask so much. Let's see. China's downturn. Wait a second. I'll do China last. Average mortgage rates top 3%, but you could still find a much lower refinance rate. So mortgage rates, which recently dipped below 3% again, delighting home shoppers and homeowners looking to save on finance have surged back over 3%, and they are, I think what was the number now? 3.05. That's your 30-year fix now. So it's slowly ticking up. I personally think it's going to keep ticking up. I mean, if they want to combat inflation, what does that mean? Higher interest rates. If you're going to start using higher interest rates, obviously it's going to be harder to borrow, and if that should bring down the home prices. But if home prices stay where they are, with interest rates going to where they are, you're in some deep trouble. I would like to say what you're actually in, but you're in deep trouble. The average interest rate on a 30-year fixed mortgage rose last week to 3.05% from 2.99 a week earlier, making it its highest point since April. I find it funny that we look at 3% interest rate and everybody panics. Hiking, they're still unusually low. Rising mortgage rates combined with the growing home prices make affordability more challenging for potential home buyers. 15-year fixed mortgages, these are dirt cheap. But again, I mean, we talk about it. Here's the guy wrote in this story. And while going from 30 to 15-year loan may mean higher payments, the lifetime interest costs will be far less. And we talked about this. If you guys saw our Dave Ramsey video, if you're going to be able to if you can finance a freaking home at 30 years fixed for 3%. Why the hell would you have a 15-year mortgage? I just don't get it. Hey, whatever you want to do. Whatever you want to do. If you want to go pay cash for your home, have at it. But you're making a very, 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 very poor decision. That's what you're doing. And you can't argue it. With inflation at a 30-year high and holding, mortgage rates are expected to continue to rise. A new Freddie Mac forecast look at 30-year fixed mortgage rates to hit an average of 3.2 over the last 3 months of this year, then steadily rise throughout 2022 to 3.7 on average by the end of next year. Which is nuts because I look at it. I locked in a mortgage in March of 2019 and I was 4.29%, and that was a phenomenal rate back then. And now I just locked in my new house at 2.75, 30-year fixed. It's crazy. And now even this, we're looking at 30 years. I mean, at the end of 2022, 3.7% is still a hell of a lot, almost 50 bips lower than what I have on my current house. All right. Apple has an event today, and it looks like they're going to be D-Snave. I like that. It looks like they're going to be releasing some computers. So they have a surprise event today. I mean, they announced Apple Watch. You know, it'd be awesome if they announced AirPods. You guys, some people love them, some people hate them. I don't care what you think because they are a massive revenue driver. They're the most used headphone out there. In the world, I think, maybe in the United States. But damn, I hope they bring out new AirPods. I want some new AirPods, and I don't want those big goofy things that you wear on top of your head that are $500. I want the little white dots that you put inside your ear, and then when somebody talks to you, you can't hear them. It's wonderful. Apple is holding its event on Monday to launch new products, including a redesigned MacBook Pro. Hopefully, they announce their Monterey software that's coming out for OS X, if they still call it that. It will be a culmination of a complete revamp to the entire Mac lineup if they do. I'm sure everything's going to have the new M1 chip. The new M1 chip's phenomenal. I have an Intel chip on the computer I'm using right now. This thing is junk compared to the new M1 chips. I got a Mac Mini with 2 LG monitors. That thing is fire. So they could also be talking about M1X or M2, depending on what's coming out. Another thing they're likely to do is add more ports, which is very welcome to their laptops, because they've started getting away from ports, getting into this magnetic connectivity and USB-C. I don't want that. Just give me a freaking HDMI port or a VGA or something like that. I don't want your hipster ports that only work from some random cord that I have to buy off of Amazon and breaks after 2 seconds. Another thing about Apple, remember where you heard this first. Apple's iPhone partner, Foxconn, unveils its first electric vehicles. That's happening today. Foxconn Group unveiled its first electric vehicle, a milestone that could boost Taiwanese electronic manufacturing. The SUV and sedan model introduced on Monday are concept vehicles that the manufacturer plans to build and sell rather than sell under its own brand. Key point right here, rather than sell under its own brand. Foxconn is the largest assembler of iPhones in the world. Foxconn agreed in late September to spend $280 million to purchase the auto plant in Ohio, Lordstown, Ohio, from Lordstown Motors Group, Corp, whatever. I'm telling you guys right now, remember where you heard it first. I'm telling you right now, Foxconn is going to be building the Apple car, and it's going to be in Lordstown, Ohio. I'm telling you right now, it's going to happen. China's plunging construction starts reminiscent of the 2015 downturn. Look at these numbers. China's new construction starts slumped for a 6th straight month. That's insane. The longest spat of monthly decline since 2015. New construction starts fell 13.5% from a year earlier. You guys realize that? How do you fall 13.5% from, well, I'll tell you how you fall 13.5% from COVID levels. You fall there because you're building ghost towns. Property sales are, by floor area dropped 15.8% in September, down a 3rd straight month, according to Reuters calculations based on Statistics Bureau data. The slowdown in the sector was underscored by a 3.5% drop in property investments by developers in September, the first monthly decline since January and February of last year at the height of the COVID pandemic. The likelihood that housing policies may loosen in the 4th quarter, and we would see pessimism. So they're talking about the pessimism, the optimism that's going to happen coming to this market. Real estate shares are down 22% over there this year. So we were talking in yesterday. I was walking in some store. I don't know. We were in some store. I think it was maybe Home Goods or something. We were walking in the store and I was talking to you, the Bid and Ask Nation, about this China stuff. I don't think that what's happening with Evergrande is necessarily going to impact the United States markets as much as we all think. I don't necessarily think that even this real estate stuff is going to impact us. I think what will happen, though, is people will start becoming a little bit more conscientious about the amount of debt that we have. I mean, as a country in the United States, forget federal debt. That's freaking $40 trillion or whatever it is. You can tell me it's 30 trillion all day. I'm not rolling with it. Let's call it, you know what? To ease your little heart, let's do $30 trillion of debt. Let's not include the $12.3 trillion that they printed because of COVID, but that's going to be paid back. It's cool. Then you go on top of that and you put in individual average debt right now is like $87,000 per person. All of this debt just falling on top of each other. I think people are going to start realizing, that does have repercussions. That's at some point that's going to happen. Let's see here. EV concept released 38 minutes ago. Yeah, that's right. If you know, I'm just reading through some of your comments right now. My Apple calls last week. I don't know what that is. Apple is hype. Apple has finally become disruptive. You know what? I've said it before. I'll say it again. Smash the like button for me. I look at these disruption people. They talk about Zoom calls, music streaming, electric vehicles. What else do we have here? Security. What else do we have here? Well, electric cars. Yeah. TV streaming. I said that one. Whatever. Apple does it all. Why isn't Apple disruptive? Apple's like the most disruptive company out there, but they get ignored. Hashtag ignored. Anyways, follow us on Instagram. Speaking of disruption right here, at TraderMo_EM. If you go and smash the, follow button, you can see me dressed up as a cowboy over the weekend. At Paul Gabriel, at Seth Kirchanan. What else do we have? Let's see what the rates are doing. I heard that this is not accurate to this morning. 1.61%. Those yields are ticking up. Earnings this week, a lot of earnings tomorrow. Netflix reports whatever you call it, the Squid Games. It's almost like $1 billion show. It's incredible. Johnson & Johnson reports tomorrow. Let's see. Tesla reports on Wednesday. Thursday, Intel, AT&T. Yep. And then Friday, American Express. And you get the gist. Anyways, look at this, guys. Look at the new website. Latest videos here, recent news here. And then let's click this and see what happens. I haven't done this. Look at that. Look at all this news. This is great. I like it. So this is new everythingmoney.com home screen. So if you click Join EM, you can roll over here and see $28 a month gets you all of the software, and that comes with all of this: 8 pillars, retirement calculator, stock analyzer tool, and then all of this exclusive content. We're already rolling that out. Momentum trading I'm working on. There's going to be so much, and there's still so much more to come. So let's go back here. If you want to join the Bid and Ask Nation, $78 a month gets you access to that, access to me exclusively. That's where you get to talk to me over the weekend while I'm shopping in the middle of a store. Paul's Super Shorts, $500 a month gets you into that tier. It's about 40 people in there, 45 people. If you want to do a one-on-one session with me, $750. I have 2 this week, one Wednesday, one Friday. That'll be exciting. I like doing those. We talk about anything you want. 900. Yeah, that's right. 900 million. So, and if you want to do a real estate deal with Paul, $10,000, 4 hours of his time, $2,500 an hour. And if you're doing a real estate deal in China, you might want to reevaluate that one with Paul. So that is that. Ask me some of your questions. We have about 15 minutes and I will run through it. Were you jamming to Kid Rock's I Want to Be a Cowboy? That's not my favorite Kid Rock song, but I do like that one. Let's see what else we have. Given the amount of massive printing of money, what is your take on physical gold as an investment? I don't like physical gold. I mean, yeah, you have it in your hand, but it weighs a lot. It takes up space. You got to store it. I'd rather just buy an ETF. I don't think that, I think the only people that buy physical gold are doomsday preppers. That's just my opinion. What do I know? Out there doing cultural cancel. I stopped using Netflix. All right. Well, for every one person that stopped using Netflix, 4,000 picked up starting to use Netflix. Alibaba. Everybody wants to know about Alibaba. I say the same thing every day about Alibaba. Okay. Oh, there's Seth. He's here. All right. I'll do Alibaba. I'm going to do it one time. I don't know why, but we're going to do it every morning. Let's see. I'm going to pull up a line chart because this is what you have to do. I want to see what we got. All right. So Alibaba, I thought that what Alibaba was going to do was create this flagpole formation where it came up like this and it fell right back down. Much to my disappointment, it pulled back a little bit and created a little bit of a W formation, and it pulled back even just a little bit more on Friday and made a little W. Now it's pulling back a little bit more today, so I'm really hoping it drops back down here into the 160s and breaks through, but it's holding that 50-day moving average pretty well. Still, the concern is pretty rough volume that's coming into this thing. So, you know, guys, I'm still not convinced that you should go and trade Alibaba. It's starting to start that trend, but just not my thing. Not my thing. What else do we have here? I have some gold spray paint. Yeah, if you go spray paint your rocks, well, that wouldn't make sense. I was gonna say Bitcoin. I was gonna say if you spray paint rocks in gold, then that's about as much as much worth as a Bitcoin is. But I actually think that's worth more than a Bitcoin because a rock is tangible and technically you can sell it. So Bitcoin is make believe. And I love that Jamie Dimon just keeps saying that. He just keeps saying Bitcoin is totally worthless. He's said it a million times. Now he's going to still let you all use it, but have fun. But yeah, it's great. Guys, smash the like button, please. I'm begging right now. All right. You are in a big consolidation channel with Carnival. And it's not surprising. Every time Carnival tries to pop over its 200-day moving average, it gets pulled right back down. And you can see that it had really good volume coming into the stock. All of a sudden, it started pulling back down. You saw volume start to decline and the price decreased. And it couldn't stay above the moving averages. So your trend is still positive, but you're starting to tick sideways, declining volume. I would not hover with this thing. I would not hover with this thing. All right. Bitcoin will stay around. I promise you Bitcoin will probably be around for the rest of my life. The name Bitcoin, the name cryptocurrency. I guarantee you it will not be the same form that it is right now, probably in 5 years from now, maybe 1 year from now. As soon as this ETF comes out that they're talking about releasing today or tomorrow, once the SEC gets in there, once the government gets in there, different ball game. I'm telling you, different ball game. You guys can say whatever you want, but you're wrong. And all you have to do is go look at cigarettes. Go look at cigarettes. Go look at cigarettes. Go look at marijuana. Go look at everything. If you think marijuana is all the jam, when the government gets their hands on it, when they figure out how to get their hands on it, that's exactly what they're doing right now. They're figuring out what to do with marijuana, just like they're figuring out to do with Bitcoin. It's game over at that point. All right. Let's see. A picture of a gold rock into an NFT. Now we're thinking. All right, so here we go with Square. Look at this declining volume on Square. Actually, I'm actually shocked that the average volume on Square is 7.1 million trades. I mean, it is a $200 stock, $250 stock, but you are in a downtrend. I don't think you'll fall much lower than probably this 240 level if you try to short it. You do have a gap to fill, so hey, if you want to short it and try to fill this gap, go for it. You'll probably bounce off the 200-day moving average and pop right back up, but this is, I think I would rather just stick to my usual thing I say about Square and day trade it. Much easier, just much easier, much less headache. Gosh, guys, everything is just consolidating. If we just, I can't go, I don't know how to go back to the last 3 stocks I looked at. Can I? No. Anyways, everything is just, I'm just going to keep drawing these consolidation channels the whole show because everything is just sitting in a consolidation channel, hovering right around moving averages. Disney, you have an uptick in volume. So you have a sweet spot reversal over here on a daily chart. But you can see, let's show you. This starting on the 20th of October, dropped to the 200-day moving average, fell back down. Challenge the 100 and 200, fell back down. Challenge the 100, fell back down. Challenge the 200, fell back down. Challenge the 100, fell back down. So this thing, what's going on with it? Look how weak the volume is. So you are just in a pure consolidation channel. You got to get over the 100-day moving average. And by get over it, I mean you need to close your price up in here and then try to get up over the 200 to have some kind of run. But your overall trend is down, so I wouldn't count on that anytime soon. I think you're just going to stay in that consolidation channel for a while. Is there earnings coming on Disney? Disney earnings are November... What? Oh, November 10th. Oh, you got a while. You got a while. What do I think about Michael Burry saying this is the start of the crash? Michael Burry's been saying this is the start of the crash since God knows when. Michael Burry is not wrong. He's just early. That's it. Why do you look at the volume and not the volume X ticker price? So volume or something. Shouldn't that be more useful than just volume? Sven, I don't understand your question. Can you rephrase that for me, please? I just don't understand your verbiage. Let's see. Snowflake. Ha. Oh, wow. Snowflake's not consolidating. It is overbought. It had a little snapback here. It's coming back again. So the concern I have is right here. I would be taking profits if I were you. The volume is very light over the last month. You're just not hitting average volume, which is that yellow line. Yeah. You know what? If you're in this thing, I'd be taking profits. That's only advice I can give you right now. Tesla short. Interesting. What do we say? No, I wouldn't do that. So you have an uptrend. Oh, you want to short it because of earnings. I mean, I'm not shorting on earnings. That's up to you. Yeah, your trend is almost maxed out. You're up there, pretty decent. You got decent volume on Friday and Tuesday, but nothing real. I mean, don't touch this thing over earnings. Just my opinion. If you want to touch it over earnings, have fun, but just my opinion. I think Sven means looking at the dollar amount of shares traded each day. I don't know. I don't know the answer to that question, Joel. I think I understand what you're saying now, but the thing that I've always looked, I really enjoy just keeping it simple, stupid. I don't think that this is rocket science. I don't think anything in investing is rocket science. Make it as simple as possible. Investing is very difficult for the common folk because they hear all this crap on television and read this stuff on the internet and think that it's this mad science that needs to send rockets to the moon and this and that. For me, looking at the volume and the average volume works. That's all I need to know. It's worked for me for 18 years. Why do I need to look any further? So that is, Sven, that's my answer. And I really just, everything, pretty much everything I do, in my life, I just look at it from a very common sense approach and I keep it simple, stupid. And that's the end of it. And if it makes sense, I do it. If it doesn't make sense, I don't do it. But I don't like to overcomplicate things because frankly, I don't think I'm smart enough to overcomplicate things. And if you overcomplicate things, it's arguable that you are a bozo. Anyways, reverse hammer hardcore here over on the daily chart. So this thing could very easily switch on us and start running down. When is their earnings date? They reported last week. Okay, so they got this little pop on earnings day, reverse hammer. This indicates a change in direction right at the 25-day moving average. Oh, look at that. Guys, look at this. They closed the day right up here, and they're opening the day right down here. So they closed at, let's call it $115, and $113.50 is where they're falling down to. So, yep, that's that. That's what you got. All right. Keep it simple, stupid. They taught me that in AA. Okay, I don't really know what to say to that. Arbitrage play. Is T and Discovery an arbitrage play for the HBO? You make a very, very compelling argument, Mark. I'm not going to lie. I am not going to lie, Mark. Somebody just asked me. Okay, Anthony, I'll hit that one for you. Len, Lennar, baby. So Lennar has rolled with home builders. Let's zoom it out here. Yeah, Lennar has rolled with home builders for a very long time. Now, Lennar has done a good job of, well, not the greatest job. They fell down fell below their 100-day moving average, dropped below the 2 and pulled up. So they are just kind of stuck here between the 100 and 200-day moving average. The volume is pretty good. I mean, you don't have many days, 1, 2, all of last week, but you don't have many days with volume falling out. The thing is, Anthony, since you have these last, 8 days under average volume, keep a watch on that because this thing could very easily start to decline down here with volume. So pay attention to that one. With that being said, what I would do is probably throw a tracker share on here or just keep it on a tight watch list. Eventually, I think this thing will bottom out and turn up and go, especially if it has enough volume to move through the 150-day moving average up into this area. If this happens, this will happen. And then you can run it up and make a little run to 110 bucks. But this is a challenging one. It's doing the same thing as everything else, just consolidating in a range just under all-time highs. Same story. Well, not different ending, but same ending. What would you say if you were the owner of LW, the biggest potato producer? I would probably try to strike a deal with Five Guys. Lamb Weston. Speaking of, so this is a pure 50%er. So you have your high here, you have your low, and then we have this 50% middle ground. It tried to break out above it, and it did it for actually the whole summer, and then boom, right back under. So this line that I drew at about $72 has become another resistance point, which is no bueno. So what I would do over here, if you want to, you can try to run this thing up back to 72. I don't think it's the worst idea. Wait till you move into the sweet spot. Over here, just play it against all moving averages. Try to get through these two and try to get over 50 and try to run it to 100. That's about it. How about Lufthansa? Lufthansa is a phenomenal airline. That's what I have to say about that. Intel reports tomorrow. Dope city. What stochastics do I use? Fidelity has 2 types. Chait. Oh, I've never heard the name Chait. Chait. So I use %K, %D, 10% over here on my long-term chart. %K equals 19 and D is 4 and the smoothing is 4. Over here on my daily, it's 10.33. And on my 15-minute chart, it's also 10.33. With that being said, and you said Fidelity, screw those. Come over here to TradingView. It's free. Just replicate my charts. If you want my exact chart setup, it's in the Bid and Ask Nation. Don't use Fidelity. Don't use Street Smart Edge. Don't use TD Ameritrade's Thinkorswim. They're all overcomplicated, and this is so much easier. And to be honest with you, I can't answer your question because I have no idea how to set it up in Fidelity. Nor do I know how to set it up in any of them because it's not worth my time. Let's see. Microsoft. So before, who asked me this question? Impeachment champ. So before I even answer this, before I even pull up the chart, can it break its all-time high, 52-week high, all-time high? The answer is if the rest of the market moves, yes, it can. Otherwise, no, it can't. So let's see what it's at now before I even answer that. Well, yeah, it can. And if we look at let me look at SPY real quick. Okay, let's look at the banks, XLF. Oh yeah, this is, yeah, you can break it because I'm just looking at the banks. Banks lead the market. So banks are going to go first, then tech. And here we have banks all the way up here. So SPY is going to follow because SPY is held down, but it's going to follow. And the FANGs are right after. So with that kind of volume moving in for the last 3 days, perfect. All you need is an engulfing candlestick. You're going to open the day a little bit lower today, but all you need is an engulfing candlestick. Look at that. Look at that little snapback. And what this was, let's zoom out over here, just show you. This was a really nice run, little sweet spot reversal, stayed up here. All this was a snapback. This is where, when something like this happens, when you're in the overbought area, but you get a little pullback, this is just time to take profits. It's not time to exit your position. This is why you take profits, because it can run right back up there for you, and that's exactly what it's doing. Why would you have exited this position? All it is doing is just snapping back on you. Your trend was still fine, but it's just time to say, hey, maybe I should take profits. And if we get 2 days like this, engulfing candlesticks start turning back up, like we're doing again today, and Friday and the day before, yeah, this is That's why I say to you guys, take profits and not we need a FANG ETF. I would be shocked if there was not a FANG ETF. Affirm, whoever asked me this, for my kids. So here's what I have to say about this. I don't have enough data on here. This company went public January 13th, 2021. So I look at a company like this, and the stock market's now open. I look at a company like this as, I look at a chart like this. I need to have a whole book I look at the chart as a book. I need to have the whole story. This is probably 3/4 of the book. I don't have the ending yet. So I don't even see a 200-day moving average on here because the stock isn't 200 days old. So to me, I would never trade something like this. I would never be able to figure out what direction these things are going in. What I would do though is go to a 15-minute chart and trade this thing from a 15-minute perspective. That is, that. Can somebody tell me where I could find the candlestick? Alex, Rush, Trading View. Give me one more stock and I am going to get out of here. I got to go meet somebody. No, I don't want to do Lockheed Simon. I do that one every day. They're releasing their own chip. Who's releasing their own chip? A firm? I mean, that's cool, but let's wait until it happens. I have not found your chart folder. You get it in the Trader Mobot. T-Row price. You get it. You got it. T-Row, Joel. Guys, smash the like button. Let's get it to 200 before we end here. So, T-Row. Man, that spiked fast. Joel, I remember we were just looking at this. This is what I don't like. What I don't like is we were looking at this thing when it was right down here, and it took 3 days for this thing to get to the top of the stochastic. I don't like that because all it did was just jump and jump, and now it just pulled right back down. So, Joel, I remember when we looked at this last week, it was looking really good, but I don't like these price jumps. It's just the market we live in today. So this thing is more likely than not just going to pull right back down here and probably maybe bounce off the 200. So long-term trend still looks a little bit rough, but that is that. So, all right, guys, that's it for today. I will see you. We need to look at ARK. You got it. William, you got it. This is the ultimate disruption. What do we got with ARK? So let's go to January 1st. January. All right, so January it started here, reached a peak of intraday high, $159.70, 52-week low. Year-to-date low of $97.22, and now we're sitting at $115.28. So downtrend for sure as of right now. This thing is for sure rolling over. So it's rolling over. Now remember, if you're in this, they have a big thing going on. They have a large position in Tesla, even though they're selling it, even though it's worth $3,000 a share. So whatever happens with earnings this week is probably going to push this thing in one direction or the other, just because it's this ETF is very weighted in that direction. So keep a watch on it. Volume has been terrible over the last 10, 15 sessions. So that's that. All right, guys, I'm getting out of here. I will see you guys on tomorrow morning. Same time, same place, 9 a.m. Smash the like button on your way out. Smash a dislike if you don't like me. And just keep building that clout, baby. Peace. Love you guys.
Thank you.